Hello, everyone, and good morning. Welcome to the SynMax Leviaton webinar. I'm Sophia LaChapelle, an account manager here at SynMax, and I'll be moderating our presentation today. This webinar is to showcase SynMax's newest offering, Leviaton, an advanced predictive and visual solution for seaborne commodity intelligence, as well as offer some insights into current trends and LNG flows with a special focus on the Israeli-Hamas conflict due to its presence in a key energy region and trade flow region. We'll be going through our presentation, but opening it up for questions at the end. So feel free to submit your questions through the platform, or you can unmute and ask your question out loud when invited to do so. I'm joined here by our Head of Research and Market Intelligence, Leslie Palti-Guzman, who will showcase how she uses the Leviaton platform to monitor this unfolding conflict and the effects of the conflict on the supply and trade flows of LNG. We also here have Dror Guzman, the principal engineer of Leviaton, who is ready to answer any of the more technical questions that may come up about the platform at the end of the session. And last but not least, we have Eric Anderson, the CTO of SynMax, who will give some context and detail into SynMax's acquisition of Gas Vista and Leviaton, as well as the roadmap for the platform's capabilities. So without further ado, I'm going to go ahead and pass it off to Eric so he can get us started.
Awesome. Thanks, Sophia. So real quick, I wanted to talk about the recent acquisition of Gas Vista, in particular, why we're interested in their technology and in developing the Leviaton platform. Many of you are familiar with competing products, which track LNG ships or oil ships or commodity flows around the world. And they all do it in a very similar way. They use machine learning models. And if you've ever used a machine learning model before, you know that it's an incredibly powerful technology, but there are some disadvantages, right? So the first one is that they're generally black boxes. They're very hard to interrogate how a machine learning model is working. You get the answers out, and you can't really always explain why pushing this data in is going to get that answer out. And then the second one is the fact that machine learning models assume a static model of the world, which is definitely not the world that we live in, right? So they can pick up on patterns very well, but they can't always adapt quickly to new and changing patterns. And so, machine learning models have proven to be very capable in LNG flow tracking, but they have disadvantages when unexpected things happen. Like, for example, Freeport blowing up, or a war in the Middle East, or other types of externalities that maybe haven't been seen in the exact same way before. What interested SynMax so much in the acquisition of Gas Vista is that they developed a novel technology that can produce the same kind of accuracy as machine learning model for vessel predictions, but it is completely transparent. So you can interrogate it more closely to understand why it's producing the answers it does. And also it can adapt instantaneously, not only to real world conditions, but hypothetical world conditions. So for example, when Freeport blew up, the Gas Vista model could very quickly adapt to this new paradigm, and all of its ship predictions and all of its commodity flows immediately adjusted to Freeport not being an option for gas export out of the US. This is a powerful, novel technology that I think is game-changing for LNG analytics. And SynMax is very excited about having acquired this, and we also have big plans about it, and how we're going to develop it in the future. If you've listened to any of my fundamental calls, you know that I think the next 3 to 4 years in Henry Hub, domestic US natural gas trading, are going to focus on 2 key fundamental areas that everybody needs to be aware of, and that is supply and LNG, right? So we've got huge plans to build out additional LNG export capacity in the US, and in order for these plans to come to fruition, supply needs to come up at the same time. And if these 2 things do not balance each other in perfect synchronicity, right, then we're going to have huge swings in the market. And so it's important for anybody trading these markets to understand, the exact impacts of LNG and the exact impacts of supply, and to monitor, how those 2 things are coming online. And doing so successfully, I think, is going to reveal huge opportunities to trade price swings in Henry Hub. Can I get the next slide, please? And then the last thing I want to talk about that is, I think, pivotal to the acquisition of Gas Vista and this product is that, not just LNG, but oil, we're seeing a lot of dark activity, more dark activity than we've ever seen before in the past. it is becoming a factor that people have to monitor. And as you know, competing products, they rely on AIS, which is the voluntarily transmitted locations of ships. Whereas dark vessels or spoofing vessels, even worse, they fake their location. They're exporting crude out of Venezuela and Iran and other sanctioned countries and performing ship-ship transfers, but they're not reporting this information. And so this is misleading traders into thinking that there are flows of commodity that aren't actually existing, or they're completely missing flows. And as you know, SynMax, one of our other products, which we're building for the US government and the US's allies, is a mass tracking product for dark vessels. So we're planning on merging these technologies together. We're going to take the outputs of THEA, which is military grade intelligence for tracking dark vessels, and we're going to merge it with Leviaton so that traders and analysts can know what these dark flows are doing and evaluate their impact on the market. So that is, in the near future, going to become a part of the Leviaton offering, is the ability to also see dark ships. And then the other thing I wanted to talk about is basically a distinction between what types of predictions Leviaton is going to produce, what predictions it has right now, and what predictions are coming in the future. So right now, Leviaton is producing what are called level 1 predictions. And what that means is it predicts the current destination of every LNG ship. So if a ship is 3 days out from loading up with gas at Freeport, right, it's going to make a prediction that that's happening. If it's now turning around and it's heading to Europe, it's going to make that prediction. A level 2 prediction, right, is what happens next after that. So in that example, that ship coming into Freeport, right, its level 1 prediction would be Freeport. Its level 2 prediction would be Europe, right? Right now, Leviaton is built out and ready to give you accurate information for level 1 predictions, which gives you a good state of the world for the next week or so. In the near future, we're going to be releasing level 2 predictions, which is going to give you accurate information about the state of the world for the coming 60 days. This is a technology which I originally developed at my previous job, and it's something that we're going to recreate here. There is information encoded in the ships right now about what is going to happen in the next 60 days. And this level 2 predictions give you the ability to decode that information and understand its potential in the market, right? The current state of the world with all of these vessels, no matter what happens, it has certain limitations about what the next 60 days are going to do. And so, that is a coming feature that we're going to unlock, but I want to be very clear, what we're presenting today and what you're looking at the Leviaton platform right now is limited to level 1 predictions, with level 2 predictions coming soon. And with that, I'll pass it off to Leslie.
Thank you, Eric. Good morning, everybody. Good afternoon for the ones joining us from far abroad. I'm going to delve right into the topic of the day, and I'll divide my presentation in 2 parts. The first one is very, very short term, and see how we use a Leviaton platform to see potential impact of the current war between the Hamas and Israel through trade, like what has been so far the impact. And the second part would be more like medium-term lasting trends that we see in the global LNG market in this new era of tensions, geopolitical tensions, and remapping of trade flows. So since October 7, when the terrorist attack of Hamas happened in Israel, we've seen a surge in prices, TTF and JKM, which basically indicates a picture of geopolitical premium and fears, because especially in Europe, we were in a very depressed market fundamentals, also in Asia. But we see that because of the location of the tensions right now, there is a potential big escalation risk in the Gulf around the Strait of Hormuz. The main risk comes if Iran and its proxies are getting involved. We know that Iran has some capability with some militia and armed groups in Yemen, in Syria, in Lebanon, and other places where disruptions can happen. The main disruption could happen around the Strait of Hormuz. We saw that Iran in the past has threatened to shut down the strait several times. There are many things that Iran can do. So we're going to focus on those risks around the Strait of Hormuz and what especially it means for Qatari and UAE exports out of the Strait of Hormuz. I would mention that right now, the market, flows have remained stable, right? But we are actually monitoring on a daily basis, hourly basis, if we see any change to this flow. And I'm going to show you just a dynamic GIF right now from our platform to show you that flows are actually moving along. So those are the flows from Qatar through the Strait of Hormuz to Europe, to Asia over the past few weeks. So right now we're in September, you see the timeline above, and you see that it has flowed along the same line, but I'll give you more detail exactly about a few changes that we have noticed. So one of the indicators that we're looking at are the flow and the pace of exports. And we've seen that there has been an increase in exports out of Qatar. If you're comparing on a weekly basis, so the week prior to the attacks and the weeks after, and we've seen an increase in flow and loading. And that there can be two motivations. One is because Asia has started to hoard supply. Asia is very risk averse, and we've seen that China, Beijing has directed its companies, its importers to store as much as possible since the attacks happened. And countries like Japan, South Korea are highly dependent on Qatari LNG, and will want to make sure that they have enough supply while it lasts. And same for Qatar. If they were, if they can export now as much as possible before any disruption can happen, that's what they are doing. So we're seeing a bump in exports since the attack happened. Second indicator that we're watching are change in corridor lanes, shipping lanes, and compare before and after the attacks. So if you look at the left picture, which is a screenshot of the trading routes 2 weeks before the attacks, you see that this is the Strait of Hormuz. The Strait of Hormuz is composed of 8 islands. 7 of them are controlled by Iran. And so basically, usually the Qatari shipments are going above or below some of these islands, but on the very set standard routes. We see this kind of the same routes 2 weeks after. That's the picture on the right hand. But we see more zigzagging and rerouting of some of the tankers. And we've seen some tankers kind of changing their mind a little bit or waiting around. So this is something that we're monitoring. Third big indicator that we're focusing on is the direction of the Qatari LNG flows. Are they going more east towards Asia, or are they going more towards Europe? And we've seen that all over, like if you look on average, the past 9 months this year, Qatari LNG flow have headed to Asia. Like 76% of the flows have been heading to Asia. This is actually, that was the case for the whole month of September. Also 76% of Qatari LNG went to Asia. But for October, we're already at 81%. And so that's really confirms our view that the flow are heading more to Asia since the attacks happen. And here what you see on this screenshot of the Leviaton platform are the destination of those tankers with the flags. You see that many are heading to China, South Korea, and other Asian destinations. A fourth indicator that we're watching closely is how much LNG is on the water. And last October, we also saw a surge in floating LNG. We saw the same surge happening also this year in October, but we see that it's potentially climbing even higher because of the growing geopolitical tensions and more hoarding from Asian buyers. So the more Asia is attracting LNG cargoes, the more potentially those vessels are used for a longer period of on the water and are floating longer on the water. A fifth indicator that we're watching is, do we see any anomalies, and how do we spot on those anomalies? So one of the anomalies that we watched recently are some diversions. So for example, this Qatari LNG. tanker was heading towards Europe, the Al-Wakra tanker, and on October 15, rerouted away from the Suez Canal to head to Asia. And we assigned some probabilities of its destination. So this is clearly some, indications again that Asia is trying to attract more supply. So now let me turn to more like longer lasting trends that we've seen since the war in Ukraine also happened. And I'll focus on the 6 main trends. The first one is that EU LNG imports are almost on par with its pipeline gas imports. So if you look at the pie on the right hand, the aqua blue, turquoise blue indicates the total pipeline, and that includes whatever is left from Russia, Norway, Azerbaijan, Algeria. And on the LNG side, it's a mix of supply, including US LNG, which actually is here on this quarter here, which is a big part now of the EU gas mix, import mix, and will continue to be so. So a big takeaway is that Europe has managed to move away from its dependence on Russian pipeline gas, but it came at a heavy cost in terms of declining gas demand. So even if this year so far LNG imports are more or less on par with what they were last year, we see that overall Europe gas imports have declined by 20%. So that's something to keep in mind for the future. Second big trend is that China is surpassing Japan as the largest importer this year. It's also surpassing Japan as the largest LNG importer from Russia. So this change in LNG supply sources for China was already ongoing last year. And has really come to fruition following the war in Ukraine, where we see that even if the imports of LNG from China are declining year over year, so Chinese LNG imports are still down compared to 2022 and are very much down since 2021. However, Chinese LNG imports from Russia are increasing, and they are coming from 3 different sources. The first one is Yamal LNG imports. This is the plant in the Arctic. Second big source are the Sakhalin imports. And third source, which is interesting, are the reload from Europe. So Europe basically is first importing LNG from the Yamal LNG plant, then reload it on different tankers to head to China. And we see that basically China is importing one third from those 3 sources. Japan is still importing Sakhalin LNG imports, and that's the Russian plants in the Pacific, and a little fraction from the European reload. For the rest, China remains highly dependent on Australian supply for 35%, Qatar 25%, and Russia now is its 3rd largest supplier of LNG. Third big trend is that Russian LNG is going to persist in Europe and will find new ways. So we know that there are no sanctions on Russian LNG. However, there are sanctions on some of the technology that Russia needs for its next wave of LNG projects in the Arctic, like for Arctic 2. Russia is also planning potentially a project called Murmansk LNG. So we're watching all this closely, but for now, what we see is that even if there are no sanctions per se for Russian LNG in Europe, Europe has actually imported less itself of Russian LNG. So when you look at net imports, so not just what arrives at the regasification terminals, but what has been consumed, we see a decline of the Russian LNG molecule into Europe. Year over year, especially since 2022. However, Russia is finding new ways to enter the European market, and that's through Turkey. via different stratagem. Russia has also 2 projects in the Baltic now, very small scale, medium scale project, the Portovaya LNG project and Voisk LNG. And those projects have exported mostly to Northern Europe or Turkey and Greece. We've seen also that Turkey has been a large importer of the European reload from Yamal LNG. So that's something to keep in mind. Moving on to our 4th trend, we see a growing and a straightening of the corridor between the EU and the US. And that will continue to strengthen this year and beyond. So that's backed up by a strong diplomatic bond right now between the EU and the US. And we see that the US is continuing to rescue Europe from the missing pipeline volumes from Russia. But the relationship can evolve, will evolve. There is always in the back of the mind, what's going to be the future role of Russia's energy sources post-war? Like in how many years it would be more politically acceptable, if ever, to import again more pipeline gas from Russia? The EU and the US are not always in agreement on how to deal with China. When it comes to gas, China is going to be the big balancer. So China has contracted a lot of LNG supply, and it's key to understand what it's going to do with those supplies. Are they going to resell it on the market? At what price? What's going to be the timing of this? So that's something we're watching also closely. So many topics of discussion between the 2 big blocks, but right now the strengthening of this corridor and this momentum will continue. So US LNG represents now 47% of the total EU LNG imports. However, I will mention that EU LNG imports are seasonal, highly seasonal. So usually in summertime, fall, and even late spring, we usually see a big drop in imports. 5th trend is the focus on Asia from the US. So that's important for US LNG, but also in terms of broader geopolitics. And we see that, beyond China, there are other strengthening partnerships between the US and South Korea, India, Japan, Taiwan, but also countries in the ASEAN region, Southeast Asia. We see a strengthening of the relation with Vietnam and the Philippines, and that will go along also more trade between US LNG and these countries. So we see that this region will likely double its LNG imports by the end of the decade. Finally, I would like to mention what we see on the key bottlenecks and shipping routes. So here, this slide is focusing on the Panama Canal. And we've seen big anxiety from the players in the LNG market regarding higher levels of waiting line, more drought coming from the Panama. And that in turn will impact the greenhouse gas footprint of LNG trade. If there are more, if the shippers need to use longer routes, it will impact the cost also and fleet availability. So that's something we're watching closely in terms of change in trading patterns, trading routes. So when we look at the months of the summer, for example, this year, and we look at all the US LNG exports that headed to Asia, what route did they use? And so you see that in comparison between last summer and this summer, we've seen that the US exported about the same amount of cargoes, but the use of the Panama Canal really dropped. And this year, it was basically 50% of the shipments used the Panama Canal versus other routes. So the Panama Canal was only still being used more than other routes, but only by a very thin margin. And the largest user of the Panama Canal this year was Japan, while last year it was South Korea. So we can provide a lot of data analytics on the main transit routes and the users and what destination they are used for. So that's it for me for now. We're going to open it to Q&A, and I'll be happy to show you more of the platform also, depending on the questions that we receive. Thank you.
Hi, everyone. So you can start submitting any questions that you have through the platform, or I can invite you now to unmute and ask them out loud if you want. Just to kick it off, we do have one question. What is your take on the latest long-term LNG contracts signed with Qatar Energy?
Thank you, Sophia. So that's a very good question. Because so towards the end of the decade, there is likely a rebalancing in terms of supply and demand. Like following the war in Ukraine, we've been witnessing a little bit more tightness in the market because you know, the projects that there are currently many projects under construction that have recently taken final investment decision, but they will only start producing and exporting by 2025 plus. So we're in a phase where there is some tightening in the market. However, 2027, 2028, it's a phase where we have many new projects coming online, including the potential expansion from Qatar. Qatar was a bit lagging behind in terms of contracting its new volumes. They want to increase by 60% their export capacity between now and 2028 plus. It's a challenge, and my view about Qatar has always been that they've been very good at preempting other final investment decisions elsewhere. So they've made a lot of announcements regarding their expansion in the past to dissuade investment decisions, let's say in the US or elsewhere. I think right now they've been catching up in the past few weeks with some of their contracting. Notably with some of their shareholders of the North Field expansion, namely Qatar, Total Energies, Shell, and the third contract signed a few days ago is with Eni, 3 European groups. I'm going to temper a little bit my optimism regarding those announcements. I'm just questioning the timing also. I think Qatar right now is potentially in a very vulnerable place because of the conflict in the Middle East, because we know it will be the most, potentially a big loser if there were some flare-ups around the Strait of Hormuz, because the Qatari LNG cargo cannot transit if there are major disruption in this area. And I think in the past, Asian buyers, notably the Japanese, have been very averse to any risk in contracting too much supply coming out of Qatar. Japanese utilities have not renewed their contracts that expired 2 years ago with Qatar. And so I think it's those 3 announcements that came, you know, October 11 and the following days. It's kind of a big PR move to reassure the market that you know, the expansion will happen and that actually Qatar is not vulnerable. So it remains to be watched if other buyers will follow. Qatar was in discussion with Germany, also with Thailand, but they have contracted only a little bit more than 1/3 of what their expansion needs to be contracted.
Okay, great. We have another question here. Can you monitor certain tankers and fleets with the Leviaton platform?
Yeah, that's a good question. So I'm going to show you quickly again the platform. And I had prepared already to show you the Qatari-owned LNG tankers. So this is the Nakilat fleet, which is a Qatari shipping company. Some of them are mostly used for the Qatari LNG trade. And you can, so I built my fleet previously in here. You know, I have several fleets that I'm monitoring. And basically, you can see in a screenshot at any time, where are they on the water? And, you know, if I'm zooming in, I can also look closely at the ones that are waiting to load or unload next to the Ras Laffan. LNG plant. And you can, for example, this one has not been moving for a while. So it loaded on the 4th of October, and it's still there. And basically, you can follow it. And I can have here, on a regular basis, any update of what's happening and where we see it going with some probabilities. Since we're here with the platform, I wanted to show you also that Qatar has so far exported this year 61.56 million tons of LNG. The largest importer has been China, then India, South Korea, Pakistan, Taiwan. So we see that the risk-averse Asian buyers are potentially going to be impacted if there are any escalation of the conflict.
All right, perfect. And then one more written question that we have here. Can you track Europe's LNG reloads and re-exports of LNG?
Yeah, of course we can. So I'm going to show you very quickly how I'm doing that. So I'm going to pick Europe, and I have here a preset polygon geographical area of interest, and I'm going to pick European Union plus the UK, and I'm going to check, okay, what this area has been exporting since the beginning of the year. So I'll put the date until today. And so we see that the region has been reloading that much exports. Now I'm going to refine it because I'm only interested to see what's going out of Europe. So I'm going to select the world out of EU 28. So I'm excluding Europe because I'm not interested in the reloading that are happening between Spain and Italy with some of regular LNG cargo. I'm only interested to see the reload of the Yamal LNG cargo. So I'm going to look now and refine and see what's being re-exported outside Europe. And here I see that we have about 4 million tons of LNG that have been re-exported out of Europe. And the main buyers are China, Turkey, India, Taiwan. US was one cargo to Puerto Rico, Korea, India, and Kuwait. And we see that the main exporters are in Spain, France, and Belgium. So we have the breakdown also by transactions, by tankers, and so on.
Another question was submitted. Considering the longer routes from US, Asia for shipping, some analysts are indicating that there will be a shortage of LNG ships in the next years. As you're tracking vessels, any view on vessel utilization rate nowadays?
So that's an excellent question. And historically, there has always been a mismatch between the delivery of new LNG tankers and the need and the growth of LNG supply, or sometimes there was too many tankers and not enough transactions. So it's really hard to match. But I think the overall consensus is that we've seen many new orders in the past 2-3 years. And we've seen also many new deliveries happening this year and the next few years. So I think overall, for now, it's kind of balancing itself. And because we see this growing trade between trusted partner, and we see an increase of intra-regional trade. So US LNG is mostly staying, in the Atlantic basin. Australia is staying, and Qatari LNG are staying within the Asia-Pacific basin. The only bigger transaction that we see is that when there are a few political animosity or historical tensions. So the Peru LNG cargoes are flowing all the way to Europe around the tip of South America, or going to Asia through the tip of Africa. Those are long routes because Peru is not sending any LNG to Chile. Or Qatari LNG cargo are going all the way to China, or very few occasional to South America. but they are not that much going to Kuwait, although that has changed in the recent months. So overall, I think the big change is China, Russia using the North Sea route, which is a shorter route actually. It's not that good for climate change and the warming, but they have been basically betting on the opening of the route all year long. For now, it's still used mostly during the warmer months, but there is definitely the goal of using more this route all year long.
Okay, so I think that's all the questions that we have submitted. So I think that can be the end of our webinar. And of course, anyone can reach out to any of us, info@SynMax, research@SynMax, and we can answer any more questions that you might have or show you anything more about the platform. So thank you everyone for joining, and have a great rest of your day.
Thank you.